Hello and welcome to the weekly market metrics. I'm your host Sandeep and we are in week 14 of 2026. If there was a progress bar for the year, we are at 25% complete. Now talking about the markets, another week in the red and it's been 6 back-to-back red weeks on Nifty now. This is also a special episode in a way as it marks the end of the quarter, end of the month and the week. Now looking back at March, it has been one of the most challenging periods for investors since 2020 crash. To find a similar double-digit monthly decline prior to that, you would have to go all the way back to 2008 financial crisis. And yes, I was specific when I said investors because the experience has been quite different for those on the active side of things. For most systematic and active trading styles, these recent months have been some of the best and the most profitable in a long time. Anyways, let's get into the charts and see how price action unfolded this week, and we will also look at what could be possible in the week ahead. As always, let's start with Nifty. On the weekly time frame, Nifty was down around 0.5% this week to close at 22,713. For the week, the index made a range of 758 points or 3.31%. And if you look at the last 3-week candles, you will notice long wicks on both sides. In a larger downtrend, pullbacks are sharp enough to form lower wicks, but they fail to sustain and end up forming upper wicks. The same story is repeating week after week. With so much of geopolitical uncertainty, it's hard to say where the bottom is. On the downside, the supports are at 22,180 and then at 21,750, and on the upside, resistance lies in the 22,900, 23,100 zone, followed by 23,850 and 24,300. The bias for the coming week remains bearish to sideways. Now moving on to the daily time frame. Talking about Nifty on the daily time frame, we had 1 red and 2 green candles in this 3-day trading week. Monday opened with a gap down of 1.1% and ended the day with minus 2.14%, while Tuesday was a trading holiday. On Wednesday, the 2.5% gap up did not sustain and the day eventually closed positive at 1.56%. On Thursday, the reverse happened. The 1.3% gap down did not sustain and the index closed 0.15% in green. Such is the volatility these days. Major support is at 22,250 and then at 21,750. I don't see any point in talking about resistances as of now. On the hourly time frame, the price stayed below the 50 EMA throughout the week. Even the gap up on Wednesday did not breach the EMA. The Thursday up move, however, has brought the price closer to the EMA. Will Monday again see a gap down opening like the past 4 weeks, or will this time be different? Let's keep guessing over the long weekend. Now talking about the monthly seasonality for Nifty, as March has just ended, March 2026 turned out to be the second worst month in terms of returns after March 2020, the COVID crash. It's also the second largest monthly fall since 2008 GFC. That's something, isn't it? For calendar year 2026, Nifty is now down 13%, marking the worst start to the year since 2020. Looking at April seasonality from 2020 to 2025, 4 out of 6 Aprils have been in green. Let's hope the green streak continues this time as well. Moving to Nifty's expected range till the upcoming weekly expiry on 7th April Tuesday, Nifty's at the money straddle premium closed at 532 points, implying roughly a 2.35% move on either side. It may seem high, but given that we have a long holiday plus just one trading day on Monday before the 0 DTE on Tuesday, the risk premium actually feels relatively reasonable. Based on the current straddle pricing, the expected range till expiry is 23,246 on the upside and 22,180 on the downside. That's roughly a 1,065-point range being priced in for the long weekend plus 2 trading days. Looking at the upcoming Nifty weekly expiry open interest, the highest OI strikes are 22,000 P and 21,500 P on the downside, and 23,000 C and 23,500 C on the upside. So broadly, the market seems positioned in the 22,000 to 23,000 range for the expiry, which also aligns with the straddle premium pricing in around 530 points on either side. Moving on to Sensex on a weekly time frame, well, Sensex was down 264 points or 0.36% to close at 73,320. The range for the week was approximately 2,400 points, down from 3,300 points last week, though that can also be attributed to it being a 3-day trading week. Supports are at 71,400 followed by 69,900. Resistance is in the 74,000, 74,500 zone and then at 77,000. The view for the coming week remains bearish to sideways, similar to Nifty. On the daily time frame, supports are seen at 71,450 followed by 70,000. On the upside, resistances are placed at 74,000 and 75,350. Moving on to BANKNIFTY on the daily time frame, it gapped down on Monday, gapped up on Wednesday, and again gapped down on Thursday. Monday was a minus 3.82% day, Wednesday saw a positive 2.33% move, and Thursday was relatively flat as the gap down did not sustain and the index eventually closed 100 points higher than Wednesday. On the downside, supports are placed at 49,950 followed by 49,100 and then 47,850. On the upside, resistances are in the 52,000, 52,200 zone. For the week, BANKNIFTY lost approximately 725 points or 1.39% to close at 51,549. The weekly range was 2071 points, which is close to 4%. The overall view remains bearish to sideways on BANKNIFTY as well. On to the hourly time frame, BANKNIFTY continues to trade below the 50 EMA, but with Thursday's up move, it has come quite close to the EMA. With March 2026 being one of the best months for short-term trend followers, the question now is what's in store for April? Another clean trend or more choppiness? Moving on to rate of change, week 14 again is red on the weekly time frame. But we do see some green shoots on month to date because the markets went up on Thursday. Is this the bottom? Your guess is as good as mine. If we look at the drawdown numbers from all-time high, Nifty Bank tops the list. Then we have SENSEX, Nifty, and the strongest, surprisingly, is Nifty Mid-Select. I actually expected it to end lower. On a YTD basis again, while Nifty is down 13%, gold is up just about 3%, so the hedge didn't play out as expected. So that's about it on rate of change. Moving on to the top sectors this week, well, IT topped the charts with 3.05% up move, followed by metal at 2.64%. Interestingly, on a quarterly time frame, IT is at the bottom and metal is at the top. Back to this week's sectors, IT and media continued in the rankings from the last week. Metal, realty and energy are new. Metal and energy specifically have been resilient as you can see them across the weeks. Given that this is also a quarter ending, I just thought of checking how the sectors have performed over the quarter since Jan 2026. As you can see, topping the charts is CPSE index, which has NTPC, ONGC and the likes. Then we have metal, which is barely positive. Rest all are in the red. Realty, IT and auto being the worst hit. That's about the sectors for this week. Talking about the range and expiries, with the week having just 3 days, the 3-day average daily range stood at 450 points, with Wednesday being the lowest at 322 and Thursday the highest at 600. Thursday saw the highest range across indexes. Maybe it got inspired by Friday since there was no trading on Friday this week. Now let's talk about Nifty's monthly expiry, which happened on 30th March, Monday. It was a downtrending day with two pullbacks. After a 250-point gap down opening, the index fell another 100 points or 0.5% and then pulled back 250 points, that is 1.1%. From 9:40 am, it resumed the downtrend, falling 261 points till 12 noon, followed by a minor pullback of 141 points. Post 12:30 pm, the index again moved lower, dropping 310 points or 1.37% to finally close at 22,380, down 488 points from Friday's close. The ATM straddle opened around 250 points, but the actual moves were much larger than the implied volatility, making it an extremely tough expiry to trade. Moving on to SENSEX weekly expiry, which happened on 2nd April Thursday. After a gap down opening of 1,170 points, the index tanked another 540 points in the first hour. From there, it rallied around 1,700 points, 2.4%, with no major pullback till 2:30 pm. Post that, there was a 450-point drop within 15 minutes, which spiked at the money straddle premiums and exploded gamma with just about an hour left to expiry. From there, the index moved up another 761 points to finally close at 73,300. The ATM straddle opened just below 600 and even made a high of 620 in the first 5 minutes. It lost almost 40% of its value only after 2:15 pm, trading around 260 points, but with such sharp delta moves, it was nearly impossible for sellers to meaningfully harvest that theta. Again, a relatively difficult expiry for those who entered late, but morning straddlers had a good time yet again. Moving on to India VIX for the week, well, even though it fell 4.8%, it still is above the 25 levels. Premiums remain elevated for the past 2 months. VIX has been rising without cooling off or mean reverting. This phase of rising VIX can be painful, but at the same time, it can be rewarding, especially for vol traders. I think I should make an episode about how to think about volatility because these are just perfect times for it. Moving on to commodities this week, well, this week precious metals, after a long time, showed some positive action. Both gold and silver are up 1.24% and 0.33%. Copper turned out to be flat. Looking at the energy products, crude oil turned out to be positive at 7.73% and natural gas is down 6.8%. Last week I had pointed out that gold was showing some strength, and that did play out a bit. Let's see if it continues further. Now that's pretty much in the commodities this week. In summary, week 14 marked the 6th consecutive red week for Nifty. Though the pace of decline has slowed, with markets showing signs of stabilizing amid high volatility. Intraday moves continue to be sharp and erratic, with gaps and reversals dominating the price action, making it a difficult environment unless one is aligned with volatility or trend strategies. India VIX, while slightly lower, remains elevated above the 25 levels, keeping premiums high and reflecting continued uncertainty. Sectorally, we are seeing early rotation with IT and metals showing strength even as broader market remains weak. Now overall, if you see, the structure remains bearish to sideways, with markets attempting to find a base but still heavily influenced by global cues and news flow. Now moving on to what caught my attention this week, well, I have 2 interesting recommendations for you. One is an article and the other is a podcast episode. Patrick McGee, the author of the book Apple in China, has this article published in the Financial Times. It's titled Apple at 50, How Asia Fueled Its Rise to the Top, which is about how America taught Japan quality processes in manufacturing and how, in a strange way, things evolved to what BYD is doing today. Extremely fascinating to read if this space interests you. Second, I have a podcast episode recommendation. This one is titled Primer on China, where the guest Manoj Kevalramani who I think can be counted among the foremost Indian analysts studying Chinese politics and foreign policy. Again, a great episode for the long weekend. As always, links are in the show notes. Now, over to what to expect in the coming week. Well, next week is a full 5-day trading week with no holidays, and as a trader, I'm really looking forward to it as we've had quite a few shortened weeks recently. Talking about the events, well, there are two important events lined up. First, the RBI interest rate decision on 8th April, Wednesday at 10 a.m. and then later at night at 11:30 p.m. the FOMC minutes will be announced, which could make Thursday's open, especially for SENSEX 0DT, quite interesting. With that, we wrap up this week's weekly market metrics. If you found this series useful, don't forget to subscribe to the channel and yes, do share it with your friends. Until then, stay curious, stay steady, and enjoy your long weekend this time.